Welcome to another podcast of Master Investors Company. Glad to be here again on another episode. Today's topic is going to be about what is the velocity of money. And I'm going to give you the formula that we can all use to leverage ourselves into wealth. And when I mean wealth, I mean having excess of cash flow, having our assets pay for our expenses and our living expenses. And I'm going to show you exactly with this simple formula that we can achieve financial independence and accumulate true wealth, because remember that wealth is measured by time, not necessarily by money. It is how much time do we have if we stop doing whatever we're doing, and can we survive the same way we're living today? How long can we go with that? A lot of people can only get to 3 months, maybe even few weeks, because they start running out of money. They start entering into fear because they're not receiving a paycheck. And there's a lot of people out there with a lot of money, a lot of income, but they have no cash flow coming in as a form of passive income. Okay, they have a job that they go to work every single day. However, they don't have the time to enjoy the money that they have because they're too busy working for money rather than having money working hard for them. So rule number one of our company here at Master Investors Company is that we make money work hard for us. We master that skill. And it takes knowledge. Knowledge is the new money, in fact, because not only that we live in the information age, but we also understand that words are the most powerful tools humans ever created. And they are free. So getting wealthy, the ultra wealthy way, the ultra rich way, the highest level of financial intelligence is by doing it for free. In other words, it does not take money to make money. So get that old belief that it takes money to make money out of your system, because it does not take money to make money. Write that down. Remember that. It takes knowledge to achieve great wealth. And it takes words to acquire assets that cash flow, that generate passive income even while we're sleeping. So here's the formula. 1, acquire assets, cash flowing assets with my money. And what I mean by money is, it could be a credit card, it could be investors' money, OPM, other people's money. Ultimately, that's what I mean. So if we get a credit card, we're going to invest that into a cash flowing asset, whether it's building our own digital products, our own book that we're passionate about, writing about the subject of whatever X, Y, and Z, and now we're selling 10 copies a day through a system, and we're not present every time that copy gets sold. A copy of a book or whatever digital product we have created gets sold. We don't have to be there because we have a system doing the telling and selling for us. Or it could be in home that we acquire through 100% good debt, and now that home is an Airbnb spot. So it's being rented all month by different tenants, different tourists, and that is cash flowing. It's paying for the mortgage, and it's paying for all the expenses, and it's also leaving us with positive cash flow. So that's number 1. Acquire assets with the capital that we have, whether it's a credit card, whether whatever. Number 2, recoup our initial invested capital back. Number 3, And this is the formula of the velocity of money. It's very important that we understand this formula. This is key to building true wealth, and I want you to get this. So I'm going to keep it short, and I'm also going to leave a link of the blog that I wrote about this specific topic. If you like to read it, go over there, and also make sure you hit subscribe on the podcast and follow us on all platforms at Master Investor. Look for the logo. Welcome to the community, by the way. Number 2, recoup our initial capital, which we invested back. Number 3, keep control over the cash flow and asset, even after we recoup the initial capital back that we invested. In other words, if we use a credit card that has $1,000 to build a digital product, we gotta get that money back, hopefully very quickly, through the sales that is being generated by that asset. And then we still have control over the asset after we recoup the money back. And that is the ultimate goal right there, and it's called infinite return on investment. It's when we recoup the money back, and that is achieved on number 3. There are 5 steps to the formula. And number 3 is when we recoup the money back and we keep control over the asset, right? So number 3, we keep control over the asset. Number 2, we recoup our money back. Number 1 is take the money and then, acquire an asset. So 3, keep control over the asset after we recoup the money. In other words, we have total control, 100%. We still own that digital book. We still own that home. So if we put 10% down on the home, over $300,000 home, we recoup that 10% back. Maybe we use the credit card to pay for the 10% down. That would be the smartest thing to do. So we're not using any of our money. It takes a little more creativity, but it's a great habit to use OPM, other people's money, and the bank's money, right? The private investors, friends and family, and calculate it, and something that is going to multiply the money, and it's going to help us recoup it very quickly. So once we have that money back, and we have achieved that, is literally what we call infinite return on investment, because the asset, as long as we do number 3 correctly, which is an asset that we can continue to have control over the asset even after we recoup the money, then we can obviously still have full access to the cash flow profits every single day, every single week that is generated from that asset. And we already have recouped the money. So let's say we pay the credit card back and we're still generating $500 a day, $1,000 a day, whatever amount the cash flow and assets generating per day. Number 4, take that money, the new money that we're getting, that is being printed legally from the asset, and move it into a new asset, acquire another asset, whether we do another book, whether we create a digital course with videos, whether we go and get another green home that generates cash flow, and we put down a 10% on a different home that is similar to that one, or we go get a hotel, or we go get a gas station with the real estate, something that is an asset that generates cash flow. And so we focus on building that asset column. Number 5 and last step is to repeat the process. That is the velocity of money's formula. Make sure you write it down, apply it into your life, and soon you will wake up a millionaire. Soon you will have exceed the amount of living expense with cash flowing assets that are generating passive income that is paying for our living expenses. It's very important to understand how to achieve true wealth by having a lot of expenses that are being allocated properly with the laws, the corporate laws because we have established a company and we're using the tax law and the corporate law to gain tax breaks and other benefits that are instilled in our laws, specifically cater for entrepreneurs and investors. So welcome to the community, Master Investors Company, with another episode, the velocity of money. Very important topic. I want you to understand that formula. I'm going to leave it just that because I want you to understand how important that is. Check out the blog. Let me know in the comments below. Go to YouTube, subscribe to our channel there. We're going to go live this Friday, and we're going to be doing lives every week, bringing you the good and bad news of money, the business principles that work in all economies. New book coming out this month, How to Create Cash Flow from the Internet, subtitled Turn Passive Income On. And I'm 100% you're going to enjoy it, and it's going to help you build your asset column and create true wealth. With that being said, I'll talk to you on the next podcast. Stay strong. Bye for now.